Welcome back to Talkpoint. Today we are diving into a major financial story despite widespread concerns about slowing economic growth. Major US banks like JPMorgan Chase and Bank of America have reported record quarterly profits. How are these institutions thriving amid uncertainty and what does it mean for the economy and consumers? Let's break it down. JPMorgan Chase, Bank of America, and other major banks posted record profits this quarter, exceeding analysts and expectations. JPMorgan reported earnings of over $15 billion, while Bank of America hit a record $11 billion. These gains were fueled primarily by strong trading revenue, high interest margins, and growth in wealth management services. Even amid slower economic growth, banks have managed to generate impressive returns. This is the footage of traders on the stock floor, charts showing interest rate trends and digital banking apps in use. On key factor driving profits is higher interest margins. Banks earn more when the difference between what they pay on deposits and what they charge on loans widens. Even as loan growth slows due to economic uncertainty, these margins have boosted revenue. Trading activity has also surged, with banks capitalizing on market volatility to generate significant profits in equities and mixed fixed income markets. Animation showing banking revenue streams, trading, lending, wealth management, and fees. Beyond trading and interest income, wealth management services and fees from investment products contributed to the earnings. High net worth clients and institutional investors continue to rely on banks for advice, asset management, and investment opportunities, providing a steady stream of income despite broader economic headwinds. This is the footage of consumer at banks, mortgage approvals, small business loans, and online banking users. Interestingly, while larger banks report record profits, many small businesses and consumers will face challenges. Loan demand is slower and some sectors remain cautious about expenses. Analysts note that strong profits do not necessarily reflect widespread economic growth but rather indicate how major banks are adapting to current market conditions. Stock market responds positively to the earnings reports. Shares of these banks have climbed, reflecting investor confidence in their ability to navigate uncertainty. Strong bank profits can also signal stability in the financial sector, reassuring investors that US banking institutions remain resilient even amid potential economic slowdowns. Economists caution, however, that record profit for banks won't eliminate broader economic risks. Concerns about slowing consumer spending, high debt levels, and potential recessions remain. Federal Reserve policy, including interest rate decisions, will continue to influence both bank earnings and the overall economic outlook in the coming months. Montage of bank investors, Wall Street, and everyday Americans managing finance. In summary, US banks are reporting record profits driven by trading revenue, strong interest margins, and wealth management services. While this is good news for investors and the financial sectors, it does not necessarily reflect the challenges facing the broader economy. As we move forward, analysts and consumers alike be watching how these trends unfold and what they mean for economic stability. Thanks for watching. Comment below, do you think record bank profits are a sign of economic strength or a warning of growing inequality? Don't forget to subscribe to Talkpoint for daily coverage on finance, policy, and current events.